Alright, let's get started here. We're going to go straight into correlation for this. So before we get into all the hows and whats and how do you draw it, how do you pair them and all that stuff, let's get into the core basics of the correlation. Let's get you a proper introduction so there is no confusion on how it's supposed to be done. So a couple things that you have to monitor for correlation. Correlation consists of grouping the pairs that have the same symbol. For example, euro is here, and here's again euro, again euro, again euro, again euro, but it's euro against something else, euro against something else, euro against something else. So what correlation actually does is if you're watching the news and there is an announcement regarding the euro, and then the world across the board starts dumping the euro, you'll actually see it here on your charts that all the euros are moving together. And if they're moving together, the world's focus is on euro. And that becomes an eye for us. It's that extra edge that the average person does not know because they're constantly focused on looking at a single pair at a time. But this is like a bird's eye view. So imagine you're the hawk in the sky and you see everything that's happening below. Okay, so what we're doing here is giving you the ability to step away from the news and actually have the same information that the news may give, but more detailed here, because news may say one thing and the markets usually go the other way. Okay, I'm sure you've noticed that by now. But price won't be wrong. Price will never lie, right? The chart's there. You can't fake that. It's already there. So when you see prices rising across the board everywhere, then you're like, okay, well, it looks like euro is rising. Or if you see prices dropping across the board, you see euros dropping. So correlation consists of, I like to look at it based on 6 or 7 pairs. So here's the currencies that are important. We have the euro, that's important. We have the dollar, that's important. We have the Canadian dollar. We have the Japanese yen. We have the pound, we have the New Zealand dollar, we have the Aussie dollar, and we also have the Swiss franc. Okay, these are the major currency pairs of the world. This is the major pairs I personally like to watch. Haven't been watching Swiss franc so much lately, but it's there. I'm going to be bringing it back anyways. Okay, so correlation works on pairs that show you similar symptoms. Okay, so for example, if you notice on this last wave here, markets are going up, 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 up. Here on EuroCAD, last wave, markets are going up, 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 up. Euro yen, last wave, markets are going up, up, up. Euro pound, last wave, markets were going up, up. Euro New Zealand, same thing. Euro Aussie, same thing. However, in the long spectrum, the charts look a little bit different. This looks like it's coming in from an uptrend, so does Euro Aussie, but Euro Yen looks like it might be in a range, and Euro USD looks like maybe it's an overall downtrend. Okay, so it is correlated recently, okay, towards this day here, but it wasn't correlated earlier. Okay, so correlation will help you look into that. And don't worry, the questions of, well, how far back do I need to look if it's too recent? We're going to go over all of that stuff. We're going to cover all of that stuff in detail. But as a core basics, correlation consists of 6 to 7 currencies. You want to pair them up together. So I paired up euro amongst these 6 pairs to get a bird's eye view. Is euro an interesting pair for the world? And when I say the world, I'm not talking about retail traders. When I say the world, I'm talking about our banks and institutions and hedge funds and all this stuff. Are they looking to dump or buy euros? And if they do, I don't participate yet. I'm just curious to see what's happening. Okay? That information already is the key, because that's where the money is flowing. And if the money is flowing there, the pot is bigger, and if the pot is bigger, it becomes easier to take from it. Okay? So keep that in mind. And so correlation is that hidden analysis. Okay? So that's the basics for it. Now let's go on to the next video. Okay, so in this video, what we're going to be doing here is we're going to build our charts together. Okay, so you can see me how I build my correlation charts and how do I keep them ready. Now, whether you like to keep them on your iPads on your wall, or you want to have multiple monitors, however you want to do it, I'm just going to show you the way I do it. And my personal preference is not a whole bunch of monitors and screens all over the place. I like to keep light because I travel a lot, but I like to keep information handy. Okay, having a laptop or an iMac or traveling with a projector should not limit you from getting the same information. However, the way I teach trading does not require you to constantly put your eyeballs on the charts and have all data processed at all times. No, that's going to give you a migraine. Okay, and that's just way too much information that you need to that if you're going to be processing it that fast, you need to be that good at it to begin with. Okay, so to go to a lower time frame or to process data faster, you must first master it on a higher time frame to make sure all the information is well trained into your body as a natural instinct. Okay, so let's go into this. So let's build a chart together. I've just opened up a empty chart. I'm using tradingview.com. You can do this on MetaTrader and stuff like that as well. So I just opened up a normal chart. I'm gonna get rid of all these indicators and stuff, keep my charts clean. Okay, now I'm gonna do the US dollar group. So I'm gonna put in, I need 8 charts. Okay, I'm gonna need 8 charts. I want the time to be the same in all of them. So I'm gonna link the interval, but I do not want the symbol to be the same because each currency symbol is gonna be different. So if I'm gonna do US dollars, so I can do a couple things. So I have Euro USD, that's a US dollar pair. The next one is Pound USD, that's a US dollar pair. We have Aussie USD, that's a US dollar pair. We got New Zealand USD, right? And then we notice how my USD is always on the right side, always on the right side, always on the right side. Now I have some USD still remaining, like USD yen, USD Swiss franc, and USD CAD. So now the USD is on the left side, so the chart is going to look in a different direction. You want to keep a very clean eye about that information. You don't want to keep it in between your charts or anything. You want to keep those pairs separately so you don't get confused. Okay, so let's say I'm going to put down USD CAD here. I'm going to put USD yen here. I'm going to put USD Swiss franc here. And I don't need that last one because I only have 7 pairs. This is 8 total. So let me get rid of that. I'm going to make this empty. Okay. So if you have, again, if you have MetaTrader or some of the charts you're using from the broker that they give you with the software, you can just set up these little boxes as you want for your charts. The key is to have you able to look at the entire group for the US dollar in a glance. So I can rename this group. Okay, I'm gonna rename this. I'm gonna call this course US dollar. Okay, so I have saved it. So every time I pull up this layout, I know my entire US dollar is gonna pop up because I'm gonna have to keep saving it for every single currency pair out there, and not all of them, but the 7 that I mentioned before. So now that I have all these currency pairs, I want to make sure that I always never forget that if I want to look for dollar strength, this chart has to go down. Okay, because US dollar is on the right side, but the reverse is true. Here the US dollar is on the left side. For dollar strength, this chart has to go this way. Okay, so keep that in mind. Don't mix them up. Don't mix them up. If you have to, you can do stuff like this. Sometimes I have my students color code them as well, where the backgrounds are a different color, so you know that these are opposite sides, so be careful with them. So you can do that as well. You can put them in the corner, or you can make a whole new separate chart, call it USD1 and USD2, and have one pairs, you can see them all in one direction, and the other pairs where US dollars on the left side. Okay, so play with it. get all your charts up and running, and I will see you in the next video. Okay, so now let's get into how to spot the flow of money. Like, how do I find out where the flow of money is happening? So we're gonna go through several examples for this. So the flow of money. Now we're looking at euro on this one. And if you're looking at euro, what I want you to do is, if you're, for example, a trader and you want to trade the 4-hour charts, to trade the 4-hour charts, you need data from the daily, which will tell you direction, right? So if you want to use the 2 time frame rule, as I don't know if you've already covered this in your Mastering Price Action course yet or not, but you should have, you will cover this stuff. So there's always going to be a 2 time frame rule. And the 2 time frame rule basically says is, depending on how often you want to trade, you must have one outlook of a time frame above you. Okay? So assuming you want to trade, 1 time per day on average, let's say, so that's like a 4-hour daily. Okay? So you're a 4-hour trader, but then you have to have the outlook of the daily. So having an outlook of the daily here, what you want, I'm going to switch to the daily charts, and all of them are going to switch to the dailies. Okay, here we are to the dailies now. I want to focus on this area here, just this much. I don't want to look at all this data, because what does it matter what the prices was doing in September? What I'm interested in this area is what's it doing here. Now here's why. Because the behavior of the market in September or October might be very different from the behavior that it's doing now. Okay, so for example, it was hardcore downtrend, then uptrend, then downtrend. But if I look at EuroCAD, it was in a range for some times, and then now it's in a downtrend. So which one do I take? You know what I mean? So avoiding conflict like that, like this one, Euro Yen, uptrend or currently range. Well, which one is it? Okay. So you want to keep that in mind, and having that said, you want to open up your eyes to just this much data here. Okay, so let's look into that. If I say just this much data, okay, what would you say the euro is doing right now? The euro's made a lower low. The guy responsible was here because the breach happened right here, right? And currently we're still below. This says the euro is still weak. It did pull back a little bit, but the euro's weak. We're gonna put this as a W. Okay, the euro is weak. Okay, on EuroCAD, if I focus on this much area as well, here we go. It broke down below. This is the lowest point after the breach happened. The guy who started the breach is up here. We're going up to challenge the breach, but we haven't gone above it. So that means it's still in seller's territory, which means euro is weak here as well. It's in a downward flow. Okay. Going forward, euro yen. If I look at the recent area only, it looks like we went higher than this area. The guy who started all this seems to be here, because once we reach this highest pinnacle, once we broke this this barrier here, right? Once we broke that barrier, that's the highest pinnacle it reached. That X marks the spot, and then since then we never made a higher high. Please do not mistake this as a higher high, because those are just pokeouts. Price does not stay up there. They're just little pokeouts. So since then, this is also a pokeout, because it was immediate to go down, immediate to go back up. If you haven't already covered this in Mastering Price Action, it will be coming up soon. Okay, so these are not important. These are just pokeouts. Having that said, these are just pokeouts. This area does not count as a lower low, but instead the line can stay the way it is, making this a range. So if this is a range, then we can put a question mark, or we don't have to put anything. This is neutral. This is neutral. Euro Aussie, if I was to say focus on just this much area here, looks like we're in an upward movement. If that's an upward movement there, this says euro strong. Okay. On Euro New Zealand here, if I say focus on just this much area here, okay, same thing. Okay, I'm eyeballing the area, just around that much area. Okay, there is no set number of candles, there is no anything. What I'm looking for is there any change of flow? If there is change of flow, it needs to show up in this area. If there is not change of flow, then the flow resumes. Okay? So in this much area, if I say overall it's a downtrend, but this overall coming in from October all the way to end of December, it's like, well, that's like several months. You want to trade today, so what does it matter what it was doing 2 or 3, 4 months ago? Okay? Focus on this recent area. What's the recent flow it has? Okay. Euro pound here. Oh, so this one also says strong. And then Euro pound here, if we're looking at this, if I say focus on just this recent area here, we have this highest point, we have a breach here, lowest point. So this is the guy who started it. We never went above him. We just poked out above, and from the lowest point, we never went lower. This is actually a range, neutral, okay, or a question mark. Okay, so nothing. So let's calculate this now. So how do I get my scoring right on this? Like, what's the score? What does it mean to keep score? So this is out of 6. Okay, I'm gonna empty this chart out. Okay, and clean it up. So what's the score here? So we had 2 neutrals. We got 2 weaks. We got 2 strongs. And then 2 neutral. Okay? So a weak is like saying, oh, okay, well, we're going to give it a -1, -1 score. Another weak, -1 score. Strong is +1. A strong is +1. And then a neutral is 0. A neutral is 0. So total, there are 6 possibilities. And out of 6, what's our score? -1, -1 is -2. -2 plus 1 is -1. -1 plus 1 is 0. Okay? Basically, there is no flow in the market. It's not telling you a definite direction, which means euro is not a pair of interest. Keep that in mind. Let's do another example. Okay, so I've opened up Aussie, the Aussie Australian dollar pair, and the Australian dollars across the board, again, put it up on the daily charts. And if we do the same things, focusing on just this much data, looking at the nearest thing, it's like, okay, well, it just broke that, and it's sellers, which means we're looking at a weak market here for Aussie. For just focusing on Aussie, Aussie's on the left side, so the chart represents the left currency pair. Okay. All right. So here also weak. If I do the same here, it's like, whoa. If I look at it just in this area here, it's debatable if it's up or down, because it's like, well, is this part of an uptrend? Well, that's the guy. It's just, I can see it's recently down, but it's up right there. This is a bit confusing. We're gonna put this and we're gonna mark it as, let's say this is still part of an upward momentum. We're gonna label this as Aussie is actually strong here. Okay, the circle was too small that I drew. I'd say this much data. Yeah, so looks like it's still strong there. Euro Aussie. Now here Aussie's on the right side, not on the left side. So the opposite is true for Aussie here. If the chart is going upwards, it means Aussie is getting weak. Okay, Euro's getting strong, but Aussie is getting weak. Here, recent area, looking at the recent area here, looking at a weak Aussie dollar. If I look at pound Aussie, recent area, this area here, seems like we have broken above this area, okay? And no higher highs, no lower lows, no higher highs. Seems like we're currently in a channel, okay? But we're, in a range, but we're still upwards. We're still maintaining grounds from this last breach, okay? So far, 2 touches and going. It's still going. So this one is saying Aussie is also weak, okay? And finally, we're coming to Aussie New Zealand. And here, Aussie's back on the left side. And if it's back on the left side, then if the chart's going downwards, that means Aussie is going to be weak here. So if I look at this one, looks like, recent area being here. Looks like we just made a breach below. And as long as the breach below is real, it's still seller's territory. Okay, if in the next 2 days or something it comes up higher, then that's not the case anymore, because then it's going to be a range like that. But for now, it's still seller's territory. So this means Aussie is still weak here. So putting up on the scoreboard, we got a -1 for weak, -1 for weak, -1 for weak, -1 for weak, +1 for strong, and -1 for weak. So out of 6 again, we have -5, and then we have a +1. That puts us at -4. Okay, that's the total number out of 6. And 4 out of 6 is a pretty decent number. That means the world is looking to dump the Aussie. Okay, the world is looking to dump the Aussie. Now you might be wondering, why isn't Japanese yen following? It's because Japanese yen is also showing weakness, but much stronger weakness, or it's way weaker if you want to put it that way. Okay, we'll get into a little bit advanced stuff like that later. But for the measuring purposes, now you have some examples. This is getting a little bit better. I'm going to give you one more example after this one, but for this particular case, we label it as -4, and if it's, as long as it's up 4 or above, 4, 5, and 6, you're okay, because the majority is pointing in one direction. Okay, in this case, it's pointing for weakness. Okay, anything below the number 4, like a -3 or -2 or -1, we will count that as neutral, like it doesn't have much value, just like we did for euro. It's a 0. Okay, so it's not much significance. Okay, let's go on to the next video. Okay, so I've pulled out the New Zealand group here, and we're on the daily chart here for the New Zealand group. So again, same thing, focusing on the nearest area here. We're looking at weak New Zealand here. Okay, or we'll just put it straight -1. Okay, over here, nearest area here, also weak New Zealand. Okay, -1. New Zealand yen here. Here looks like New Zealand is strong. Okay, looks like it's actually, this is the guy responsible. So seems like it's a +1 here. Okay, so Euro New Zealand now. Don't forget, New Zealand's flipped now. New Zealand's on this side. So a chart going upwards in this case means New Zealand is strong. Sorry, New Zealand is weak. Ooh. See, it's even confusing for me. So -1 there. Pound New Zealand, same thing. New Zealand's on the right side. This one is actually showing weakness. Sorry, neutral. There is no higher high sequence since this stage. It seems like the markets keep coming back down. Goes up, comes down, goes up, comes down. If we were to focus just on this area here, seems like it's, let me clean it up. Just on this area here, seems like we've breached this area. This is the guy who started it. Here's the highest point, and looks like we're still in upward motion, so that's weak. -1. Okay, and finally, Aussie, New Zealand. New Zealand being still on the right side. The chart's going down, which means if this is like that, this is strong. New Zealand's strong here, which is a +1. Okay, so we got a +1, a +1, that's a +2. minus 1, that's 0. And then minus 1, that's minus 2. That's the overall number for this. A minus 2 is not important. There is no money flow on this one. Okay, so what I need you to do right now, for homework, basically, for practice, what I'm going to have you do, going into next week, before I release the next set of videos for you, is I want you to put this into play, put practicing finding out where the flow of money is, and then I want you to use your creative imagination or creative juices and be like, I wonder what I can do with this information. What does this information mean to me? How can I trade with this information? And as we go into the next week and onwards, I'm going to start showing you how I use this information and what it actually means. And we're going to start going into very much in depth and in details. So we're going to end it right here for this week. And we're going to jump straight into the next week. Don't forget your homeworks and let me know in the comments below on how you find this whole correlation thing so far and every step of the way. Cheers.
Okay, welcome back. So by now you should have had access to the elite community, and what we're going to be discussing today is the strength meter. Now, the wonderful strength meter. So in-house, what we do is we go in and do our strength meters every day prior to London session around Frankfurt open. So if London opens at 8 a.m. in London, then an hour before, so at 7 a.m. London time, the strength numbers are usually updated around that time. So let's take an example here. If I come out to the daily charts area here, so this is the day. This is updated once a day, and I come down and I say, okay, I want to see 1 month of data or 3 months, 1 month of data, and I pick a random day. So let's say I go with this spike here. I go to December 14th, 2016. Okay, in December 14th, 2016, I see CAD being a +5. Okay, CAD being a +5. I'm like, okay, CAD is strong. What does that mean for me? If CAD is strong on that day, let's go to the daily charts. Okay, let me clean this up for you quickly. I think I drew too much last time for you guys. Okay, so CAD being strong, +5 means majority of the pairs. I have 6 pairs, and out of 6 pairs, 5 of them are saying same direction. They're saying CAD is strong, which is most charts should be going downwards, right? Because USD CAD is on the right. So if a chart is going downwards, it represents CAD being strong. Here again, CAD going downwards represents CAD strength, downwards CAD strength, downward CAD strength, downward CAD strength. Here it's upwards, and in this area, CAD yen represents CAD on the left side, which means an upward market represents CAD strength. Okay, so we've had 5, which means one of the pairs didn't agree or it was neutral. For example, maybe Aussie CAD. It was probably going sideways at that moment when Armo was doing the numbers, and when we released the strength numbers, it was very neutral. So we didn't really have much to say about that. Okay, 1 second. Ooh. All right, good. I'm glad I recorded that. Okay, so going forward, so a couple things I wanted to show you. How do we use the strength meter? So that's the topic of this video. How do you use the strength meter? Like, what does it mean? What is that +5? What do I do with the +5? Am I supposed to match the strongest pair with the weakest pair? Am I supposed to look at everything related to CAD? What am I supposed to focus on? Okay, so the few things. Okay, the reason why CAD flares up in our strength meter, so the fundamental says there's something up with CAD. The world likes CAD, and it keeps buying CAD in, truckloads. Just buying and buying and buying CADs across the world. Okay, now these are big banks, hedge funds, private equity firms, everything. They're all buying CAD. Now, we don't care why. What we're concerned about is, okay, now that they're buying CAD, if I participate in CAD, what is my risk? That's the most important question. If I participate in CAD, what is my risk? If I simply go with CAD strength, yeah, I know I'll make money. It's going to be hard. It's going to be aggressive. But the whole question is, which pair do I enter and when? And that's going to limit your risk, because the better you can control your risk, the more money you make. That's the law of making money. You control risk, you'll make money automatically. You run after money, you'll make less money. It's as simple as that. Okay? So let's take a look at some of these examples here. Let's go back to the strength meter. On that day, what are the numbers? Let's get down to them. So we have CAD as +5 right up here. I'm going to put my mouse there again. CAD at +5. New Zealand, I'm going to write this on my end too. CAD 5. New Zealand at 5. Pound at -1. So pound is neutral. Aussie is neutral. There's nothing there. Japanese yen at -6. Euro at -4. Okay, and then everything else is neutral. So these are the most important ones: CAD, New Zealand, yen, and euro. Okay, let's go back to the charts now. Here we are. So if that's the case, so this is December 14th, which is right around there across my charts. Okay, just for a point of reference, right around there. If I put my mouse here, you'll see the black line across all the currency pairs, so you know exactly around that time. Okay, so let's dive in. So we have CAD as strength and New Zealand as strength. Now, if CAD and New Zealand are at strength, let's bring out the whiteboard here because I want to show you guys this thing in pure logic. Okay, so I have a habit of saying I'm going to draw a circle. If you can see it, say yes. Okay, so if CAD is at 5 and New Zealand's at +5, what do you think the chart's going to look like? Okay, this is CAD and this is New Zealand. Okay, this video is going to be a little bit longer than usual, but that's okay. We got a lot of grounds to cover. Okay, so CAD is showing strength, but so is New Zealand. Now, if both of them are showing strength, how do you think the chart's going to look like? Okay, a range is a representation of strength on both sides. It means equilibrium. No higher highs can be made because of so much power. No lower lows can be made because of so much power. So both parties keep kicking in. So on the higher time frame, you're going to see this. You know, on your daily, you're going to see a range starting to develop. Okay, yeah, stuff like that. So, you know, little tails and stuff up and down, and we can easily draw the line like that. Bingo. Now, you see these things here, the spikes that I've mentioned to you in the Mastering Price Action course as well. These spikes, I want to go into detail about it with you guys. Okay, so keep that in mind. If this is the daily, I'm going to show you what this looks like on the 4 hours now. Okay, so this is the 4 hours now. So if this is the daily, this is the 4 hours. On the 4 hours, the same big range, because it's larger, is going to look like this. Boom, boom, and then sometimes it's boom, boom. Now, you see these spikes that happen? Now, what we call false breakouts or fake outs and stuff like that. Do you understand now why they happen? It's because both of the parties are very powerful, which means they're fighting so aggressively that you're going to have spikes. So if I'm going to say, okay, sellers are coming, okay, sellers quit, and I should buy right there, I need to be careful because my opponent is strong. Whichever one is my opponent, the opposite side, he's very strong. So a spike that can come down and go below my stop loss is very probable. Okay? This goes behind the logic of extreme usefulness of correlation. This will show you at what times is your stop loss going to be hunted. And we might sit in the corner and think, oh, it's the broker. It's not the broker. It's this understanding of this knowledge of why are we having spikes and which pair is going to stop me out. So that's one of the uses of the strength meter, is to go with strong versus strong. Let's break this video, go into the next video, and I'm going to show you more examples of pairing up strong versus weak or strong versus neutral and stuff like that. Okay, so just jump right into the next video. Okay, so welcome back. Now we're going to be going with a strong pair with a weak pair now. Okay, when I go strong versus weak pair. Now, isn't this normally looking like strong? If I put the strongest pair, which says going strongly up, against a weak pair, then what it's going to do, the chart's going to look like this. You know, it's going to be awesome. I should buy that. I'm going to make a lot of money because it has so much force, so much power. Isn't that the way the brain thinks that how logic works? And that's absolutely correct. Now, I want you to wait for a moment, though. Don't celebrate just yet. Even though that logic is correct, thinking that if I pair a strong pair with a weak pair, it should skyrocket. Yes, it will skyrocket. Here's the problem. Here's the problem. Here's your aha moment coming up now. It took me years and years and years to realize that when I was doing correlation and I was pairing up these strong versus weaks and stuff like that, I was thinking, well, if I want to buy and the price is pulling back, don't I want to be in the pair that's going to move the fastest and the strongest? So I was like, well, that has to be a strong pair versus a weak pair, which is like a +5 combined together with a -5 or a -6. I was like, oh, that would have been awesome. It's just going to skyrocket. But every time I kept getting stopped out. And then the trade would go, and they would go so much. And I was like, what in the world is happening? Every time I get stopped out. But then later on, when I did my research to figure it out, I was like, it is correct. I did pick the best pair because it travels the furthest, because it's so powerful. But I just couldn't get on. And after years and years and years of research into this, here's a solution of why this happens. Let me show you. It comes down that I was shifted away from the basic fundamentals of how trading works. Trading, just like any business, is the same. For someone to make money, the other person has to transfer money to them. Correct? So, in trading, if you want to be a winner, someone on the other side has to make a mistake and has to make a loss. Correct? So, this objective of if the markets are going up, like this, if the market is strong as a 5 and a -5, let's say, okay, these are very strong numbers, okay, the pullback obviously is going to be very shallow because they're so strong, right? I want you to think this way. If you, let's say the big boy, you're the big boy, okay, if you're that buyer, for you to buy, someone's got to sell you something. Do you think people are selling when they see a massive upward movement come in and the sells are struggling like that? No, they're not going to pump in their money. They're too afraid. In fact, they're probably participating. They're saying, I'm coming along with you. So there's no sellers. If there's no sellers, how's it going to go up? How is this guy down here going to say, oh man, I made some serious money with this thing? That's why in these special moments, an unusual moment happens. So if I zoom into this area, this is how this is going to look. So the markets are going down, pull back, going down, pull back, going down. A very shallow V formation, preparing for a takeoff. It's very, very like shallow pullback, right? It's like, okay, if I buy from here, I got to take it out till here. It looks very shallow. But with the knowledge of, I know this is extremely powerful, not many sellers are participating in this, which means, hold on, do not buy it right now. That used to be my personal #1 mistake. Because right here, even though the pattern and the structure and the idea is correct, this would happen. Boom. very aggressively, that activates all the sellers. They're like, oh my God, oh my God, oh my God, it's going. Let's get into it, right? Isn't that what happens? Everyone jumps in on it. Now they're confident the sell is going to work. Because now all the idea of, oh, it can't go up forever, that logic comes in. Well, it's gone up too high, it must come down. That logic comes in. So you have all sorts of gamblers activating sells at this point. But at this point, no one's doing anything because they're afraid. In fact, they're into buys. And as a buyer, if you're the big boy, you don't want to really share the money with all the little guys trying to buy. You want to change the turn of the markets to make a good profit. So a sudden move happens down, and it can then spike up, but it may not give you a test back. It just goes up and then it takes off. Okay, welcome back. So now we're going to be working with a strong pair, let's say a +5, with a neutral pair. A neutral pair is basically anything inside a 3. So whether it's +3, 1, or a 0, or -1, or a -2, or -3. Anything between a plus and a minus, +3 and a -3. Anything in between, it's all considered neutral. Now, the reason why we call that neutral is this pair, what I like to call it, I call this a control pair. Okay? When I say a control pair, is this pair determines the fate of pairs who are neutral. Okay? If this pair wants to go up, it's going to drag these guys with them. Okay? So that's the control pair, and then we call these the neutral pair. Okay? So let's say we're working with a +5 and a -2, let's say. Okay? So a strong pair and a neutral pair. Okay, this is all out of 6. So looking at the charts on this, with the +5 and a neutral, we're looking at the charts to be something in this style. Pullbacks to be normal. And then, V formation, preparing for launch, and then it takes off normally. It can do a couple more pushes before reaching the recent high. And then he might be able to poke out slightly higher, and then, that'll be the end of it before he tries again. So this one has not a smooth rise to profit, but it does have a smooth takeoff. Okay, a smoother takeoff, which means it has less messing with you to do. Now, this is a key ingredient that most people overlook. Most people, they just pair the strongest with the weak. I was that most people. I was constantly getting losses. Like, what in the world is going on? And then I started to work with, okay, let me try these numbers, a strong pair with a neutral pair, finding out that the neutral pair, it's so neutral, it just doesn't mess with me. And the pullback comes in medium size that gives sellers confidence to be like, oh yeah, it's no longer a buy, it's a sell. Oh yeah, it's no longer a buy, it's a sell. It's making lower lows. That gives sellers confidence that it's working. The sell is working. So that more people start coming in as a seller, and that's business for you as a buyer, saying, okay, good. Keep coming in, keep getting confidence, because that's good for business for us. Okay, and as they keep coming in as a seller, we prepare as the buyer. Okay, so working with a strong pair and a neutral pair, there are benefits like that. So let's take a look at that same chart we were looking earlier. Let me link it up here, one moment. Okay, we're back. Sorry about that. Okay, so if we see the numbers here again, just as a reminder, we had a +5, a +5, a -4, and a -6. So let's say we pair the CAD with the pound, right? Pound CAD, for example, pound CAD or Aussie CAD. You see, Aussie has no number, which means it's probably 0. So Aussie CAD makes it a strong pair versus a neutral pair. So if we take a look at Aussie CAD, for example, let's go up to this chart here. Let me open up Aussie CAD. Here we go. Looking at it from the standpoint of 24th of December. Sorry, was it 14th of December? Am I right? Yes, 14th of December that was. So 14th of December, which puts us at the line right there, saying CAD is strong and Aussie is neutral, which means give me a pullback and I'm preparing to sell it. Obviously, it's seller's territory, right? Okay, that's the whole gist of, let me put the seller's territory here, right there. That's seller's territory. So on the 4 hours, we want a pullback to occur, and that pullback, you want it to be as subtle as possible. So you're seeing buyers come up. You're like, okay, here we go. Buyers coming in, pullback 50%. Buyers come up again, barely make higher highs, but rest 50%. Good. Buyers come in, slightly make higher highs, and then complete rest. Okay. If buyers come in and do complete rest, there's no higher high, because this high is a faker, right? There's no higher high. It just goes up and comes back down, doesn't it? See, from this area, goes up, comes right back down. So it's like, okay, it looks like the buyers are dead. The last test, notice there is no higher high on the last test. It's more subtle. It doesn't spike up and then back down. It's more subtle. So if you get in after that area, you have a higher chance of surviving. And the movement down, as you can see, comes down, slows down a bit, and then goes down again. So the move to take profit, even though it looks very smooth, it actually, this moment here, the 4 candles sideways, that can drive you nuts, because 4 candles on a 4-hour chart means 16 hours. So that can make you start feeling like, oh, maybe it's not going to work, maybe it's over, maybe this, maybe that, maybe everything, right? So the smooth transition all the way down, it does not happen with a strong and a neutral pair, but it does give you a smooth takeoff from the moment you get in. So these are some of the benefits of going with a strong pair and a neutral pair. So let's go into a little bit looking at a strong pair versus a strong pair. Okay, a strong and a strong. Let's take a look at that. So a strong and a strong would be, for example, it would be CAD and New Zealand. So let's take a look at New Zealand CAD. We're going to pair the bottom two right here. That was a +5 and a +5. They're both strong. So if I go to New Zealand CAD and take a look at those on the 14th, I'm going to go back to the daily. I'm going to start from there. And I'm going to say 14th of December. 14th of December puts us right around there. And you can see why Armo's looking at this as, well, this chart's not going anywhere. Okay, strength versus strength. Okay, very decent, easy to draw range. No higher highs, no lower lows, right? But if we go to the 4 hours, this strength versus strength does all this sort of nonsense. Take a look at this. All this stuff. This activates people to turn sellers or to turn buyers, when in reality it's like they're just going out for all the stop losses below here. They're going for all the stop losses put right above there. They're just gunning for it. They're like, okay, you know, we're gonna go after it. Now here's an example of that. Let me show you here. So let's say you're coming in on a regular normal business day, and you see that New Zealand is strong, CAD is strong, and around the 8th or 9th, you're looking at this and you're like, oh, fantastic. Here comes the buyers right here. Okay, I'm preparing for a sell because overall we're in a downtrend. Let me put that in. Let me show you here. So overall, we seem to be in some sort of a downward movement right there. Okay, so let's say you're just looking at it like that. You're like, this closest thing I see is this little area here, or this area up here. So we're in a downtrend. We're in seller's territory, basically. The guy who started it, it's up here. Seller's territory. So we're looking at it on the 4 hours. We're like, okay, seller's territory, which means keep selling. So here comes the buyers. They're going up. They pull back 50%. They go up again, and they pull back 100%. And we're like, oh yeah, that's awesome. Let's prepare for sells. But look at this sell preparation. Look how high it comes. It goes even higher. Like imagine you put your stop loss just above your recent high. This is going to spike you out. And there is a chance that this can spike you out as high as this red line. See, this is the problem when you pair up a strong pair versus a strong pair. You can't just assume the buyers are dead. They're dead on the chart for the moment. But you have to understand the world wants that currency. The world also wants your opposite currency as well. Which means there is higher chances of spikes. Does that make sense? So keep that in mind. So when you're working with it, I'm not saying you can't trade this. I'm not saying trading ranges are bad. In fact, some of my students, they love ranges because they move so quickly. So ranges can be beneficial, but if you know why a range is there, if you know your strength numbers, put it to your advantage. Learn to put your stop losses a bit further when it comes to numbers like these. Now, your stop loss is no longer going to be very static, right? The static idea of, oh, what's your stop loss? 30 pips. No, out the window. What's your stop loss? Recent high, recent low. No, out the window. What's your stop loss? It depends. That's your answer now, because you flow like water. You go as the the saying, the saying as we discuss also in the motivational and daily routines is, be like a glass of water. If I put the glass of water in front of a black background, for example, that water, if you look at the glass, it looks like it's black because it looks right through and you can see the black behind it. So it looks like it's black. But then when I move the glass of water to a red background, well, it looks like it's red. But then whenever I remove the water's clear again. Whenever I remove the glass away from any of those backgrounds, clear again. So what that's basically trying to say, it's a Buddhist philosophy kind of thing, is whenever the glass representing you is in whichever environment, you adjust to that environment. But when you leave that environment, nothing sticks. You're clear as water. Nothing sticks. So you can blend in like a chameleon, no problem. But when you leave, you don't bring in all the opinions and values and cultures and all that stuff from anything. You come in neutral again. So that's what it is with trading as well. Based on the information now that you know, you don't have to stick to my stop loss is always 30 pips. My stop loss is always above the recent high or below the recent low. Now you adjust to the situation. Cool. So hopefully this was good. Hopefully this was good for you. So we did a strong and neutral. We did a strong and strong. Let's do a strong and weak now to show you that now strong and weaks are fun too. Okay, the ones that I used to mess up with a lot. So this has become one of my strengths now because I failed so much at it that I feel like there's no more failure I can do on it. It's like I failed so much with it. Okay, so strong versus weak. So for example, in this case, it's going to be CAD and yen, right? CAD extremely strong at a +5 out of 6, and yen -6 out of 6. That's like extremely weak. So let's pair those two together, CAD yen, and let's go take a look at CAD yen. Let's take a look at that example. Boom, boom, boom. Here we go. Daily charts. Let's put up the line at 14th of December. Boom, right there. This is saying purely the market's going this way. Why? CAD is strong, which means chart goes up, and yen is weak, which means chart also goes up. So both of the currency pairs are pointing upwards at their both with forces on both ends. Forces coming in from CAD and forces coming in from the Japanese economy. Everything just forcing this chart upwards. So look at the pullbacks coming in. Very shallow, right? Very shallow pullbacks. Very shallow. So let's take a look at this shallow pullback. This wonderful shallow pullback. Here we go. Here comes the problems with these pairs that are strong and weak. So for you to be a buyer in this chart, it's saying, give me a sell and I'll buy it. Okay, so we need sellers first. Here comes a seller. Okay, seller coming in, pulls back a little bit. Seller coming in, pulls back a bit. Okay, now this may, to some people, say, well, I think that was a pullback a little bit there, so the seller must be dead. That can be an idea. But if you don't see it as dead and it's still coming down, you might see it as dead somewhere here, saying, okay, that's dead. Prepare for buys. Stop losses, recent low. This thing gets you. This thing gets you. How much does it get you? How much spike is that going to happen determines on the big boys' understanding of how many people are confident that it's a sell. Confidence, remember, comes from this. anything spiky, anything large candles. Large candles builds confidence for the traders to follow it like sheep. Okay? So if you want traders in the market to start following the market in a certain way in an uptrend, give them strong red candles and they will follow it like sheep to start selling. Because first they always have an idea that it can't go up forever. So the moment a strong red candle comes in, they're like, I knew it. It validates their opinion. If it's just a small red candle, they're like, let's see, let's see, let's see. A big red candle says, I knew it. You know, that ego just kicks in and says, God, I'm good. You know, so this is actually good. You know, the fact that trading is such a psychological game is just fantastic. Because I don't look at it as profit and loss. I look at it like money comes and money goes, you know, in life for everybody. But the fact that for you to become a trader, you have to become one with who you are. And that's just incredible that this journey becomes easier. And as you get better and better in this journey, you know more about yourself. You know more about yourself and you're like, oh my God, I can't believe I do that. Is my real life like that too? Am I really that focused on what I really think and believe and reality turns up to be different? You know what I mean? So it's just incredible. It's a very humbling experience to be a trader. And it also is a strong ego point too, because you feel like you're the smartest person in the world at the same time. So it's wonderful and humbling at the same time. So enjoy it. We'll catch up next week. We're going to go into some more topics like leading pair and lagging pair, and then we're going to go into examples because we need to go into examples of, okay, once this information happens, how would we prepare? How would we start gearing up and stuff like that? So practice this information for this week, and we'll catch up next week, and we'll make sure we go dive into it a little bit stronger. Cheers. Okay, so welcome back. We're going to be discussing quite a few things this week. So let's start with the understanding of what's the leader and laggard pair. Okay, so and how can it be beneficial to us? Because there's a concept of we hear about it all the time. There's a leader and a laggard pair. You probably heard me say it many times of how I keep an eye on these things. But what does it mean? How do we figure out who they are and stuff like that? So the leader and laggard pair is a term. Leader means the one who goes the fastest. Laggard means the one who is the slowest. If the word laggard doesn't make sense, we're going to change the word to the word slowest. It's as simple as that. We're going to change the words to fastest and slowest. Okay? No leader and laggard. Okay, we'll keep it simple. All right, so in this particular case, we're looking at the Japanese yen pairs. You can see they're all Japanese yen pairs. And in this Japanese yen pair, you can see from November to December, for the longest time, we've had Japanese yen strength, right? Sorry, weakness. Japanese yen weakness across the board. Now, in this Japanese yen weakness across the board, let's say you're a smaller time frame trader. So this is the daily chart, and according to the daily chart, see, if it's weak, it gets a -1 on this chart, -1 on this chart, -1 on this chart, -1, -1, -1. So that's a -6 total. Okay, so if you're doing your currency strength meters and you have to put in the numbers, this would get a -6 out of 6, which means the world is dumping the yen. The yen is crashing across the board. Okay? Now, we need this underlying force, this massive force of, oh my God, look at the yen, it's just dying. Because in that force, we know a couple things. One, the market is moving. Two, there's heavy volume trading into this. Okay? Which means we as general individuals, as much as we buy and sell, we cannot even accumulate close to the volume that the big boys trade. Okay? So having that said, there's volume in here, which means if there's movement and volume in here, people are looking to buy and people are looking to sell. There's more trading activity. Okay? So now enters us, the small people. Okay? The small dogs. And we're coming in and we're like, all right, opportunity. Where do we get in? We know the world is dumping the yens. What about us? What do we do? Where can we fit in to dump the yen as well? Okay? As speculators, right? We're in, we're out. Quick money. Okay, so let's do this. Let's go down to the 4 hours and let's monitor these sections. Okay, let me scroll back. Okay, let's see if I go back to December 15th. Here we have December 15th here as well. I'm going to put back December 15th here as well, which is right there. December 15th here as well, right there. December 15th here as well, which is right there. Okay, I'm going to put the signs for December 15th so that it's clear for everybody. There's December 15th. December 15th. Okay, December 15th. Where is December 15th? There we go. There it is. Okay, notice all the patterns look very similar, don't they? It's like, oh, pull back buy for all of them. Okay, here we go, and here's another one. Okay, here comes the real research now. Okay, if you're good and you put in the work needed to be to get all the information out, you become Sherlock Holmes or that investigator or the CIA, or you do your investigation to figure out what is happening, what sort of stuff is pulling back, and based on your last, your previous knowledge of what happens when you mix a strong and a weak and a weak and a strong and this and that and this and that. If you keep that in mind, if you have to, revisit that lesson and master it. Okay, so here we go. I'm going to take it very slowly here. Okay, we got USD yen after a sudden breakout to the north, after this major sideways, and breakout to the north, we look like we've had a 20% retracement. Okay. CAD yen, on the other hand, after a breakout to the north, look at the breakout that we've had on here. This seems like we've had a lesser retracement here, like a 10% retracement. Okay. Pound yen, after a breakout to the north, the same concept, right? Around the same time when they had a breakout to the north, we barely made it out, and the pullback seems to be 20% as well. Okay, let's take a look at Aussie yen. After a breakout to the north, we went up this high and we pulled back 5%. New Zealand yen, after a weird breakout to the north, this one looks like it just keeps pushing higher and higher and higher. Our pullback is almost unnoticeable. Okay. Euro yen, after a nice breakout to the north, well, looks like we don't even have a proper breakout to the north here, so that's something to keep in mind. Okay, and then that pullback there is 50%, 30% of this movement. Okay, so this one's very shady looking, right? Euro yen doesn't look like, wait, do I put my line here? What happened to the breakout? What happened to the range? Why is this up here? And how come we never broke out? So there's so many questions. I'm going to remove the line from that one. Okay, so let's look at the concepts of leader versus laggard. Okay, step number one. After the range, which market moves the furthest and fastest? Okay, this is important. Moves the furthest and fastest. We can say, oh, CAD yen moves really far and very fast. Look at all those green candles compared to, well, look at these green candles. There's some reds in there. There's smaller sizes, a lot of tails on top. Look at this one here. When he goes up, it's like inch by inch by inch by inch, and then finally it breaks out and then it keeps wobbling up here. Okay, this one, we don't even know it's breaking out or not. So Euro yen's not even in the question. New Zealand yen, this thing's just inching through. It's grinding and grinding and grinding and grinding. Okay. Aussie yen did a nice breakout, pulled back a little bit, but kept going higher and higher. So this one looks quite nice too. So when we say which ones are the nicest ones, we're like, CAD yen looks very nice, and Aussie yen looks very nice. Now the word very nice comes from the last move. The last move was very aggressive on these two. Now, touching back on the previous lessons, when a market moves very, very far and the pullback happens, okay? If the market is just here ranging, we don't know anything about the seller or buyer. Correct? Correct. I'm assuming you're saying correct. But as the buyer here kicks in, what do you think the sellers are doing? Remember, for us to make money, we need sellers. If the buy is coming in at full force, how many sellers play this game? Not much, right? Not much. Let's take a look at this one for an example. This one that keeps grinding its way up with barely any pullback. No big red candles to scare the people. In fact, everyone is staying away. So if no one is buying, if I buy this one, look at the performance of that. Very crappy. Very crappy. Okay? This one on Euro Yen, we can't even decide yet because we don't know if that's a higher high or not. Okay? So that's something we don't know yet. Aussie Yen, after a sideways movement, a strong break up, and then a sideways momentum to resume back to the north. Now, the sideways momentum that came in, look at those red candles there. Is that decent enough to make people say, oh my God, it's going to be a sell? Just watch. No. Look at the movement from that. How much does it perform? So, it's the idea of putting together the knowledge of the buyers, the state of the buyers. Now, take a look at this pound yen. Look at the condition of this buyers. Look at the candle sizes. And then look at the red ones that come in. They go up no higher high and then bigger red ones. You see, these are good. And look how close it is to support equals resistance. This gives people hope. Okay? USD yen. Look at the condition of the buyers. Up and down, up and down, up and down. And then look at these big red bars. It almost looks like if someone was saying that support equals resistance there, oh, it didn't work. It didn't work. It's actually holding below support resistance. So the sellers will be like, it's not a buy, it's a sell. It's not a buy, it's a sell. So this concept activates sellers. How many sellers on this one? Okay, big sellers there. But does it break support equals resistance for them? Does it make them think, oh shit, here comes the sellers? No, not much. Here, pound yen, yes, a little bit. Because if this is support equals resistance, it looks like he went higher and he just collapsed. So there's more people there. Okay, so when you put all this information together, you come up with, I got a leader here. Okay. And then we got some laggards. Laggards are the ones that look like this. Now, it seems counterproductive almost. It's like, wait a minute. I thought leader was supposed to be the one who goes the highest and the farthest. That's the concept majority of the people have. Is that if he goes the furthest and the strongest and the fastest, he must be the one I want to do my buys on. That basically is a strong pair versus a weak pair. Those you want to be careful from because they are going to try to spike. They're going to try to do all sorts of stuff because there's no sellers there. There's no seller trying to do sells on this thing. And then afterwards, if you look at the market, look at this one. See, look at the sells there. The following effect after it. Look at the following effect on this one. Look at the following effect on this one. Look at the following effect on New Zealand yen. Look how low that comes. Look at the following effect on Euro yen. And the following effect on Aussie yen. Okay? Do you see the logic behind if there is no seller, then there are going to be sellers. It's not just the sellers are kicking in. It's the buyers saying, I have no sellers. I have no choice. Let's drop the market to get sellers to come in. So they start to remove their funds or they start to exit their positions. Hence, the market starts to drop. Does that make sense? Okay, it's a lot to take in at one shot. So the leading pair is the one that shows clear signs of, okay, he's doing something positive, but he's also showing signs of, hey, seller, why don't you give it a go? Why don't you give it a go? But the ones who go the fastest and the furthest have dangers with them. The danger number one is, can we get in without getting stopped out? Okay, because they might spike. And then two, once we do the buy, what's the scope of the buy? How far can he travel? Okay, we would like to have trades like this, don't we? Where it's like, okay, well, normally I would exit at the recent high, but this trade is like, boom, one shot all the way to the top. This one, recent high gets conquered and goes a little bit higher. This one also conquered, a little bit higher. But look at this. Look at that little spike there. That extra spike that comes down. Because now sellers are also looking at this one. It's no longer a buyers versus seller. It's a buyer. It's an equilibrium. It's almost like a little range. So they fight here. They fight. And that spike comes out. Okay. In this particular case, it also looks the same, buyer versus seller, but it's not clear for the sellers that it's a sell yet because it's all up in buyer's territory and the signs are not with heavy red candles. This one looks like a buy tried to go up and then failed. Okay, we're gonna do more examples of this because this can be a little bit daunting and difficult, but remember, it's not hard, it's easy. So make sure you keep that mindset in there, because as it gets difficult, it might be easy to say, oh man, I don't know how to do this, I quit. Okay, don't do it like that. You know, you guys are Naveen Prithiani students here. You guys are Urban Forex students. Urban Forex students do not quit. Quitting is for losers. Okay, I'm gonna say that out loud. Quitting is for losers. Don't be that loser. You guys are better than that. All you need is a little bit of push, and we're gonna get through this together. Don't worry. Okay, we're gonna go on to the next video with some more examples. Okay, here we go. We're gonna jump straight into this one. This is now the US dollar pair. Okay, US dollar pair. And if I say focus on the recent area, so let's say we focus on the recent area, just this phase here, and that phase there, that phase there, this phase here, this phase here, and that phase there. Okay, so just a quick rundown: US dollar on the right side, right side, right side, right side, and then left side, left side. So the bottom two charts are supposed to be opposite. Okay, so Euro USD, here we go. We got weakness here. It's going upwards. That means Euro is strong, but dollar is weak. So weakness. Here, strength. Okay, pound is weak, dollar is strong, so strength. So far we have no score. We have a +1, but a -1. That equals to 0. There's nothing so far. Okay, here we go. Weakness. Weakness. Charts are going down. Weakness. Charts are going down. Weakness. We got weakness as a majority now. Okay? So far so good. You guys understand that concept? It's like if I had to put a score on it, we got a -1, -2, -3, -4, -5, and then a +1 equals to a -4. That's how you get a number. So we got a -4 out of 6. If it's a -4 out of 6, a majority is saying weakness. So all we need to do is keep it simple and saying, okay, this we're not going to put our focus on. Okay, so that one's out of the question, and we're going to just ta-da. Okay, there we go. So that's not going to mess with us. We're not going to waste our time looking at that, because that is being controlled by probably the pound group. Okay, so we're not in the pound group, we're in the dollar group, so we want to just focus on the US dollar. So let's go into the US dollar a little bit more hardcore. So in the US dollar, Euro USD, we're looking at the weakness. And let's say you're a smaller time frame trader, so you go down to the 4 hours and you're like, okay, people are dumping the US dollars. The US dollar is crashing across the board. What is that guy Trump doing? You know. So whatever the situation might be, our job is to figure out, okay, if they are dumping the dollars, at what point do we get in, and at what point can we participate? Okay, or anticipate, sorry. Okay, so how do we get in on that action? All right, so let's take a look at this on Euro USD on the 4 hour. So let's say I'm looking at this as January, around January 7th-ish, like this. So in this phase, take a look at these pullbacks. Okay, markets are going up, pullback, spike, blast. Okay, let's take a look at some other pairs. Same situation here. This is around January 5th-ish, more or less. Let's take a look at January 5th in this area. Where do we stand on January 5th? Is right there. Boom. Okay. Little pullback, take off. Okay, keep that in mind. We got here January 5th, which is right there. Where's my mouse? There we go. Okay, deeper pullbacks and then boom, take off. Okay, January 5th on this one. Oh, this is supposed to be for a sell side. So there we go. January 5th, that's a thing there. Sideways and then collapse. USD yen for the 5th. Where is the 5th? There we are. Deeper pullback like that, followed by a collapse. Okay, so let's understand this. Let's start to rate them now. This one looks a little bit more choppy. Let me get rid of all these weird nasty red lines so we can see it much more clearly. Okay, let me click delete faster. There we go. Boom, boom, boom. Good. Okay, this one we're gonna keep out. Okay, so let's work with Euro USD first. When the charts went up here after the first initial break right there, did he make a higher high? He made a higher high from this red candle, but he didn't make an overall higher high in his trend. Okay, so he's not so powerful. Okay, step number 1 to identify. The next thing, when we broke it here on Aussie USD, that's an official higher high. It's a higher high from this entire trend. Okay, this guy is powerful. Okay, let's take a look at this one. New Zealand USD. Okay, seems to be a higher high from its trend basically that's coming in. Okay, now that it's a higher high, he's also powerful. Let's keep that in mind. Now, USD CAD, this is supposed to go to the downside if we want to go for US dollar weakness. This one, when he broke it to the downside, that's a lower low from this entire trend. Okay, that's good. He's powerful. So USD yen breakout, is that a lower low? Okay. Yes, seems to be the lower low across the whole thing from his recent trend. Look at this trend. It's so choppy. It's like a channel. It's just going down slowly. Lower lows just a little bit. Lower highs just a little bit. You know, so it's going down very slowly. So we're going to still count that. Now, here comes the fun part. In this whole sequence, we know we probably don't want to be messing with Euro USD because it doesn't seem like he's the fastest. It seems like he's the slowest. Okay? We're going to call him the follower. Okay? The follower. He's the guy who sits in the back and saying, oh, somebody please do something and I will just follow along. Someone please do something. Hold my hand, please. You know, so he's the follower. He just obeys orders by listening and watching other people take the lead. Okay? So he's going to be the slowest one. We're going to keep that in mind. And we know that even ahead of time. Okay, well ahead of time. Next thing. Aussie USD. Okay, power to lead. New Zealand USD, power to lead. USD CAD, power to lead. USD Yen, power to lead. Now, remember USD Yen, even though it's made a lower low, notice how it's coming in a lower low from a trend that's like not so powerful, right? It's just almost like a channel. Okay, so it's like, I don't know if I want to say USD Yen is the best one because it's not so strong enough. Okay, what are strong ones? Oh, USD CAD looks pretty strong. I like that one. Aussie USD looks pretty strong. I like that one. And New Zealand USD looks pretty strong. I like that one too. You know, so they're all looking pretty good. Now, look at the distance when he went higher high. I'm going to put my line right here. When he went higher high, far and aggressive. Okay? Notice we're not doing typical normal stuff now. We're now truly reading the markets. This is advanced stuff now. We're getting in hardcore and we're saying, you know what? I'm going to extract the DNA out of this market and we're going to figure it out. Over here, look at this higher high. Not so higher high. So we're like, oh, okay, well, New Zealand dollar is not so good. This one, the last time, when he broke below that, it's like, whoa, that thing went far as well. Okay. So USD CAD and Aussie USD seems to be our two
fastest and strongest pair, followed by New Zealand USD and USD Yen as runner-ups, and finally our humble little Euro USD as someone hold my hand, please. Okay? So we got the little follower there. Okay? So I'm going to write this down. Okay. Powerhouses, number one. Followers, number two, and then the slowest, number 3. Okay. Before we go into extracting all this information, we want to make sure one thing is that the followers that we have, let's make sure their groups do not interfere with us. Because what if Aussie dollar has some weakness also? We're in trouble. What if Japanese yen has some weakness also? We're in trouble. Remember, Japanese yen was weak across the board too when we just did the last video. There's a problem there. So we want to keep that in mind. Like, oh, maybe I should stay away from this one because they're going to fight. Maybe that's why it's going into a channel. New Zealand US. So you want to make sure you check all these ones to make sure there is no counterbalance. There is no opposite party saying, no, I don't want to do this. Okay? So let's stick with the strongest one so far. Now the strongest one so far. When he goes down, look at the speed he's going down. Full speed. And you're like, I know it's going to sell because the world is getting rid of their dollars. I know that. You know that. I know that. Now the question is, how do I make money from this? For me to make money, I need a buyer. And if, let's say you're a buyer, just assume you and I are buyers in this chart. And we're looking at this chart coming down at full capacity. At what point in your mind and my sane mind are we going to say, okay, I'll just buy it here because it looks cool? No. Nothing really tells us, buy it. This is awesome. Everything looks lower low. Support resistance holding. Lower low. It's not working. Let's take a look at Aussie USD. Now this one, we need to be, for us to make money, we need sellers because we want to buy it, right? So we need sellers. Assume you and I are sellers. Take a look at this area here. This high comes up, pulls back a little bit. We're like, oh, we can't sell now. But then he comes up again, no higher high. We're like, interesting, but it doesn't mean anything. But then he goes down and he makes a low this low. We're like, oh, that can be fun. Because now it looks like we're challenging these support resistance. And we're like, oh, maybe it's going down. Let me sell it. There's opportunity there. Okay? Opportunity right there. Next person. Let's take a look at some of our followers. Obviously, if you want to be a seller on USD Yen, this is definitely buyers for you to sell to. So that's definitely a good sign because that means your trade is healthy. New Zealand USD, if you want to do a buy, you need sellers. That's definitely going to make many people start selling this big chunk of a move. So if all these things start activating, so we're going to just leave out the follower for this for now. We're going to leave out the follower from this. The leading pair were like, oh man, I love you, man, but I just don't see how I can get in because it looks too dangerous. Because just last minute, he can spike me out like it does here. I need to be careful. So, if I'm going to be doing Aussie USD as my best pair, I'm looking at the sellers coming in. Here we go. Sellers coming in right there. Boom. They're getting confident. First sell coming in. Pullback, support resistance. They're like, let's sell it again, baby. They're selling it again. Boom. Sellers are out. Stopped out, completely out. Buyers are back in the game. Anywhere in here, when you activate your buys, this is the momentum you get following it. Look at the poke out and stuff like that. Not so risky. It doesn't poke down till here to stop you out if your stop loss is here. No sudden poke outs. A little bit safer. Let's take a look at USD Yen. As the buyers activate here, the whole thing turns around immediately. Now, the whole thing turns around immediately. We're like, uh-oh, what is this now? This looks like it's turning into a range because no lower low, but no higher high either. It's as if this high never existed.
So now it's like, okay, well, the buyers are officially dead or they're going to quit. And when they see the buyers are unable to go high again, that for us means prepare for sells. Now notice the spikiness of this. It's a little bit stronger. Remember earlier when we were talking about Japanese yen being also weak? Yeah, keep that in mind. It's going to try to spike you. So be careful with that. Don't be so stingy on your stop loss and saying, you know what? I'm going to enter right here. I'm going to put my stop loss right here. And I'm going to target down as low as I can. And I'm going to make 800% profit. You can do that, but not on these numbers. Not on these currency strength numbers. You have to be a little bit more cautious. And you can only play that risky game on stuff like this, on Aussie USD. Okay? Again, I'm jumping ahead of myself. I'm teaching you guys a little bit advanced techniques on how to make more percentage of profit instead of less. But let's keep going. Let's keep going. So here's that little spike ability. Your mind is still on the sell side. You're like, I don't care. I need to sell this. I don't care. I need to sell this. But this is a good sign that the buyers are here. You're like, yes. Now there's money for me to take. Okay? Here, USD CAD, you're like, sorry, dude, I really like you. I don't know when I can sell you. The only thing I can think of to sell you is if I watch the rest of the correlation and I say I will sell you when everybody sells you. That is a technique as well. When everyone is ready, well, I'll be ready here as well. Notice one more thing here. No lower low, no lower low, no lower low, no lower low. But here, no higher high, no higher high, and then suddenly a new high before it takes off. But it has a new high. It jumps up higher and maintains ground. You see how suddenly, quickly this thing tries to become a leader? And it's almost unnoticed because everyone else is trying to do their thing. But this one is like, hey, if you watch this clue, you'll see I'm ready to go. While the other ones are doing ranges, longer time sideways momentum. Look at this weak one. Look at that spike down before going up, and look how far he goes up. So do you want to be in the following pair? He will eventually go up, but do you want to be a follower? No. So it's important to identify, once you know the world wants to throw away their dollars, and if they want to throw away their dollars, how can you do it safely? We need to master leader and laggard, or fastest and slowest. I hope this was important and useful to you. We're going to catch up next week. We're going to go in even more hardcore. All right, see you guys soon. Cheers. Okay, welcome back. So what we're gonna do this week is we're gonna step up the game a little bit. We're gonna get into something more interesting today. Okay, we're gonna be using correlation to understand timing. You know, that's the common question that many of you guys ask me, thinking that well, Naveen, how do I know when is the right time? And I'm always in my mind is like, I want to help them, but I can't help them because they're not gonna understand. They're not gonna understand. But now that you guys have come this far and you're getting into correlation and stuff like that, I'm going to go into some tips and tricks on how correlation can be used for timing. It's not the only method. There's a whole section of timing coming up further down the course. But then we're going to go into timing using correlation. Okay, so let's go into using correlation for timing. So over here I have the US dollar group, as you can see here. Every pair is US dollar on the daily. Here's you got USD on the right side, right side, right side, left side, and right side again. Okay, so we got US dollar pairs across the board here. Now in these US dollar pairs, let's take a look at the most recent market. Okay, let's say you know, we want to look at this recent buyer's territory here. Okay, it's the same one here. It's the same one, I believe it's this piece right here. Yep, that piece right there. Is that right? Yeah, that's right there. Where is that? Gonna put that mouse there. And this piece right here. That spot is this piece right here. And that same spot again is this piece right here. Okay, so these territories are basically telling us that the US dollar is weak, and for our job is give me a pullback, I want to buy it, right? So let's go down to the 4 hours, looking for that sequence of, well, when the pullback does come in, when do we know when to buy it? Okay, now let's take a look at this first one. If you were to read these sellers coming in, okay, if you were to read that seller coming in, you see the seller coming in, he rests 80-90%, seller coming in, he rests a little bit, seller coming in, he rests a little bit, seller coming in, and then complete rest all the way up to here. It's like, wait a minute, that was supposed to be my take profit area, and he's completely rested. When do I ever get into this trade? It's very confusing, isn't it? Okay, let's take it further. Okay, once this area here, there's a next set here. Okay, we got some sellers, pullback sellers, pullback sellers, pullback 50-80% maybe right there. Sellers again, no lower low, it's a faker, comes right back up with a full rest. Okay, as if that rubber band man guy, he's running down every time he beats his record. This time he's a faker, he doesn't beat his record, and he rests a little bit more than 100%. That means he's done for. Followed by a test in the market. Okay, like give me any pullback and I'll buy it in this stage. This test comes in right at that spot. I'm going to put a circle. That's where your buy happens. Let me show you something here on pound. Pound is coming down, same sequence. Sellers coming in. Okay, then he rests maybe 30-40%. Seller coming in again. He's like, whoa, he beats his record barely, but then he comes back and he doesn't beat his record. So that was a faker. It was not real. But how much does he rest? 100%. He's all out. Once you rest 100%, it means any pullback for us is a buy. Now, if we hit the buy there, the buy doesn't go to a recent high or a higher high. The buy, in fact, comes right back down and then it goes. It's like, what in the world? What if that could have stopped you out? Depending on where you put your stop losses. That could have stopped you out. Let's take a look at the one on the right side here. Aussie USD. Same scenario. It says this is supposed to be your buy after you get a series of pullbacks and then a full rest telling you there's no lower low, and that's supposed to be a buy right there. Okay, and now if that's supposed to be a buy right there, that buy also is supposed to go for a higher high, but he just barely goes up and crashes right back down. It's like, huh? What's going on here? What's going on here? Okay, now before we get into more examples and stuff, just looking at these three here. So the closest one that we see that's logical is this piece right here. And we look at that with pound USD and we look at that with Aussie USD and we're like, well, how come these ones don't go? Notice if I put a horizontal line right there. I'm going to do the same thing for the same time. Right there. That's the same marked period for these blue. I'm going to put one line over so you guys can see the candle. Oh, sorry. Notice the spot to buy is different here. It's supposed to be here. I'm going to put the same line here, which is going to be right there. It's on that red candle there. The spot to buy is right there. So if you were to take a buy accidentally on pound USD and you see it's performing, you move your stops and blah, 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 and then it comes right back down, you're like, whoa, what's going on? And you close it for break even or whatnot. And you see, well, the flow in the market in the whole US dollar is still, they still have the rhythm. You can still take advantage of that and pull your trade out of it. Okay? And here's an example of that very trade. I'm going to show you. And I took that Aussie USD based on that same concept for a buy, and you can see how I hit the buy. Considering my buy is supposed to happen here, but I hit the buy there, right at that tip there, because I saw Euro USD preparing at that moment. I used correlation to enter my Aussie USD almost blindly. Okay, this For many people, they cannot grasp this information because they need to see something as a pattern. Well, I didn't see a pattern on this, but I did see a pattern on Euro USD. But I did see all of them were working together. Now, if all of them are working together hand in hand, you start to pull out some information. You're like, well, then they should start to move together too. What are the chances of this surviving and going with Euro USD? So I took the trade. Trade went into a buy. Obviously, a lot of the students took some trades as well. Pulled out a decent $280. It's not too much, but took a small risk on that because the fear in my brain was still there regarding it. That will it come down? Is it safer to do this? I'm basing it purely on correlation. There is nothing on Aussie USD that tells me to buy it. In fact, if I show you my 60-minute chart, it looks like I hit the buy as the red bars are coming down. Now, no person hits a buy like that, especially understanding that. Aren't we supposed to see the sellers die or fade out and then we buy it? This is one of the situations when we use correlation to our advantage and then we pull the trigger. Okay, so let's start looking at some more examples. Okay, so we're in the pound group now, and I have switched to the 60-minute time frame just to change up the time frames a bit to show you can use this in any time frame. Okay, so let's say 60 is your big boy, right? And if 60 is your big boy, you're watching all the charts and you're like, okay, well, seller's territory here. Okay, the recent seller's territory here. Pound yen looks like it's in a range. Okay, we don't have any territory there, nor buy nor sell. Got a range here in pound Aussie as well. Pound New Zealand. Okay, looks like this is definitely in the seller's mode as well. Seller's territory. Pound Euro pound, buyer's territory here because pound is on the opposite side. Okay, so that's understandable. Okay, so they're all saying pound is weak, right? Pound is weak across the board. Now the question comes is, okay, how do we use this to take advantage of this in terms of correlation? Because let's say you're looking at this as a sell for you want to do a sell on pound USD, but you're like, I don't want to do a sell on pound USD because it looks like it's going to be so dangerous. Look at how strong this uptrend is. So how is my sell going to survive? I wish I can sell a weaker pair, such as, pound New Zealand or pound yen, where the trend isn't so threatening. The flow of the market isn't so up in the sky. So let's take a look at these different variations and be like, okay, well, how do you use one to leverage off the other? First thing that you have to make sure is confirm that correlation exists. In this case, they're all moving very similarly. Pounds dropping here, pounds dropping here, pounds dropping here, dropping here, dropping here, and here rising because pound is on the opposite side. Okay, so it's correlating. It's doing things together. Now, when I pull this up on the 15 minutes now, going into the pullback mode, it's like, okay, let's do the rubber band man. So here he comes up buying. He rests a little bit after beating his record. He rests a little bit, like 50%. He runs again, beats his record quite a bit, but then he rests 100, 200, 300, 400%. That's a complete rest. Almost looks like there's no higher high. That run was fake. Okay, once he runs and rests all that much, for us it's like, okay, I think the buyer is dead. Give me a pullback or give me his last run and I'll sell it. And he last runs and you're preparing for sells, but you're like, no. I know I want to sell it, but I know my risk is too high because this trend is extremely powerful. I don't know when these big boys are going to hit it. I want to stay away from this one. You can use these moments to time as well to say, how can I reduce my risk, increase my profits by finding pairs that happen at the same time? So in this particular case, when you're looking at this at 515, you got this trade right here. Okay, that's pound CAD. We got 515. You have this trade right here, which is the range pair. top of the range. Okay, safer. Range means both buyers and sellers are powerful, and we saw in the higher time frame that this one looks healthier. Okay, pound yen 515 puts you right around there. Okay, another safe place, top of the range, trying to sell to the bottom range. This one's already done. 515 for this one puts you right around there, makes new lower lows and everything. This one is still working on it, reached recent lows so far. Euro pound 515 puts you at right there. Now when you see this movement on euro pound, you're like, what is that and what is that? How can I possibly take a trade after that? That confusion keeps people away. Okay, that confusion keeps people away. But if you're able to figure it out of what's going to happen, because on this chart you can't figure it out, but using its group, using its partners, you can. And once you figure it out, you might have a smooth run from this going back to the recent highs. And look at how smooth this one is compared to everything else. Okay? So some of the good ones that we see so far is euro pound. We see pound yen being my favorite one. The reason being, let me go back to the 4 hours and show you. Sorry, the 1 hour. Bad habit. Go back to the 1 hour to show you. Okay, so on pound USD, we were afraid of, we don't want to sell in the face of this. It's too dangerous. Who knows that the big boy is sitting here somewhere? Okay, who knows? So we don't want to sell to that. Okay, we're going to end up in the money spot. Selling here in an uptrend also. excuse me. Selling here in an uptrend also, still quite risky. But pound yen, on the other hand, was an uptrend that went sideways, that went lower sideways. You see what I mean? It was a range here, then it dropped lower, and then it became a range here again. So it's like, oh, that looks even better because it's showing me a little bit more signs of sellers being there. Okay, pound Aussie, big uptrend with sideways momentum, but in buyer's territory. So that's pretty risky. This one, a slow uptrend, very choppy, followed by a lower low sequence trying to come in and challenging the guy who started it. So I don't want to really sell this one either, because I'm right next to the guy who started the upward movement. Okay, so that's pretty risky for me, and I know always the big boys always win in situations like that. And then euro pound, this one is down, up, down, barely makes a lower low, and he comes up to here. Now this seems very interesting because it's like, if I buy this, am I in seller's territory? If so, I'm in trouble. Okay, because I'm gonna be trading the money spot, and that's what's happening. These buyers are gonna be fighting. So we're gonna go into the next example, where we're gonna go deeper into, well, what happens about the exits? Can I use correlation to enter, but also use correlation to exit? Because exit also requires timing, doesn't it? Okay, so let's go dig deeper into that. Okay, so when it comes to using exits, during this, using correlation for exits, what you want to look at is the same situation. So let's say, using that same example we did before on pound yen, saying that we hit the sell from up here, that 515 mark, right? We hit the sell from up there, and we're going for the recent low. Let's say we mark it like, okay, well, that's the recent low, we're going to take it to there. We hit the buy on euro pound with the same situation, saying we're going to go take it up to the recent high. And for some reason we say, okay, let's say that's the recent high. So we're going to go down to the 15 minutes and we're going to take a look at this and be like, okay, how do I know when am I supposed to exit? Okay, couple things to know. You look at the remaining of your groups and be like, well, what's the majority doing? Well, when you sold pound USD, or when you were about to sell pound USD, your target would have been the recent low, which is not here, but in fact here, because we don't know if this low was real or not. So that one's already reached objective. If you were to have sold pound CAD right around this price here, your objective would be your recent low, not here thinking it's a double bottom, but rather here, because this was a faker and this was a faker. It's like these lows came down and came up both very quickly. So it's like, that's reached. This one hasn't reached yet, assuming you haven't moved it. You know, you're like, it's not reached yet, but it looks all red. It looks perfect. I should just keep it going. On your euro pound buy that you have, oh, it's all green. It's perfect. I should keep it going. Okay. Pound New Zealand, on the other hand, when you entered it right here at 515 mark area, your recent low, in fact, when he broke support, it goes lower. Your recent low is actually here. Okay, so that one's approaching. Okay, and Pound Aussie. Well, that one was a range, so your recent low has already been touched. Okay, if the idea comes to your mind that, oh, but look, Pound USD is going further than its recent low. Oh, Pound Aussie is going further. Okay, this is hope, basically. When you start going stuff like this, like, okay, it's going further, what's going to happen is you're going to start thinking your pound yen will go further. Your euro pound will go further. But what you're missing is, well, this one didn't go further. Well, this one didn't go further. So what is it about these two that I'm absolutely certain my other two is going to go further? Okay, believing in what you want to believe is the single most worst thing invented to humankind. Okay, go with what you see in front of you. Go with reality. Stop believing in what you want to believe. It's not reality. Okay, so when you look at it like this, you're safer by saying, I should close out my positions. I need to exit these positions because this is probably going to be the best price I'm going to get for my position. Because if they all start reacting and start bouncing back, so will your trades. And then you're never going to get that price back. Okay? And what happens when the price comes back? Okay, at least come to here, I'll close it. Okay, he's going a little bit higher. Okay, at least come to here, I'll close it. And sooner or later, you're either going to get stopped out or close at break even, or you'll only take out a couple dollars from it instead of a proper profit. Okay? So avoid messing with that habit and keep it clean, keep it simple. And you wanna use your exits just the way you use your entries as well. Okay? So I hope this example was good. Do look at this chart on your time again to see where it ends up and how it reacts. Cheers. Okay, so we're just giving it some time. I wanted to give it at least 15-30 minutes so we can come back and revisit this. Take a look at Pound USD when we label this. See how the market reacted from here? Look at Pound CAD, reaction as well. Okay, Pound Yen, we had a slight reaction and then the markets are turning downwards again. Euro Pound, kept going. Pound New Zealand kept going, and Pound Aussie kept going. Now, the question I wanted to ask you to remember is, are you willing to take that risk that it's going to keep going? Or are you going to be that guy who's going to be like, it might hold? Okay, the closer you try to play like you know everything, the dangerous it becomes. You have to play it safe in the market. Remember that concept, control risk, you control everything. But you chase money, you're going to be in a problem. So some pairs did react, and that some pairs can be your pair. So you got to be very, very careful. So just wanted to show you this video to give you a quick heads up on how correlation for exits ended up resulting. So again, there's more exciting stuff coming up next week. So just hang in there, practice everything you've learned so far, because let's face it, correlation is difficult, but remember the concept. It's easy, it's not hard. Keep that motivation, that mantra going. You'll be able to figure it out in no time. So it takes a lot of practice, given some time and repetitions, and you should be just fine. Cool. See you guys next week. Cheers. All right, guys, welcome back. Welcome back. So, a couple things I wanted to share with you guys for this week is how we're gonna finish off with correlation. Of course, we're gonna go into more of how to put it all together and everything in the upcoming courses. There's gonna be a lot more where correlation still plays a key role and everything. But I just wanted you guys to basically get a strong grip on what correlation is, right? So again, to do a quick recap of everything you've learned so far about correlation, okay? Correlation is like the biggest boy. It's the biggest boy that's just not visible on one chart. Okay, so you're going out of your way to look for where's that big monster of a boy who simply just trades one single currency pair. For example, if he's just trading the Aussie dollar, just a single pair. He doesn't care about what currency pair to do. He's just trading one currency. So say if you imagine it like that, like this guy is going to move the entire currency across the board, and prices or economies will follow. Okay, just if you want to imagine it like that, just imagine it's one big guy in the back of the in the back of a bank doing this. So you can just imagine it like that. So another thing to realize about correlation always, looking at stuff we did last week on timing with correlation also gives you a heads up on when a trade is ready, when a trade is not. However, there's more details to it, which we're going to go into more of the timing section a little bit later on. Now, when I want to say to close this off with correlation, some of the key important pieces is when you do the window shopping. Okay, window shopping is the phase that, okay, I know that there is a correlation across the board. So let me show you something here. So here's a trade I took on Aussie USD for a long on a few days ago, and then it just played out today. But what I wanted to do is I wanted to share this in these recording videos with you guys to show you with this trade. Let me go into the daily. Okay, now if I were to look at the days prior to this, the daily shows me that the markets are going upwards here, right? That's the latest data that we have. Okay, on Aussie CAD, same thing. It was upwards. On Aussie Yen, okay, the latest data was buyer's territory, upwards. Okay, Euro Aussie, it was downwards. So sellers support and resistance, seller's territory, it's still downwards. Okay, which means Aussie strong. Okay, and then here same thing, Aussie strong. Oh, sorry, this one looks like it's in buyer's territory. So here it's saying differently. Here it's saying Aussie is weak. Okay, and then comes Aussie New Zealand. This one is also saying Aussie is out of the picture. Okay, it's saying Aussie weak. So majority of the pairs are saying is Aussie strong. Some pairs are saying Aussie weak. Okay, let me dim out the ones that are saying Aussie weak. Let me gray them out. Let's gray this one out as well. Okay, there we go. Okay, so we're working with now these 5 pairs, right? Now, window shopping is the phase where when I go to the 4 hours, I'm like, okay, I know the direction from the daily. I'm a 4 hour, 1 hour trader, right? So I look at my big boss and say, big boss says Aussie strong. Yes, we're gonna go with Aussie strong. Okay, then you go down to the 4 hours and you're like, okay, what does my big boy on my chart say? Okay, so then you come into your big boy on your chart, and then now you're starting to watch the flow. So let's look into the flow of all these things. Let me remove all this nasty lines everywhere. There we go. Okay. Now, when we're looking at the flow here on the 4 hours, what we're doing is we're window shopping. The reason why we're looking at the flow is we're trying to understand which pair is a good pair. So let's take a look at Aussie CAD, right? Now, instead of looking at the most recent data for looking at what's happening like we did on the daily, we're more concerned of what's the flow like of the market. So it's like, okay, the flow of the market is up and then down. It's like, okay, the flow of Aussie USD is up and then range, but a range in buyer's territory, right? That's the absolute last break, and since then this is the highest point it's made, and he's never made a higher high since. Everything has been fake since then. It's just a range above above that area. So if there's a range above this area, that means this is all still buyer's territory here. So this shows signs of buyers. Okay, this shows signs of buyers too, but what kind of buyers? Like, oh, look at that stuff. Like, what a mess. Okay, what about Aussie yen? Okay, this shows signs of buyers, but what is this? It's like I'm in an amusement park, you know, like watching a roller coaster go up and down, up and down, up and down. Okay, so that's not going to be very healthy. Not yet. We'll come to that conclusion if it's healthy or not in a bit. And then finally, we're coming out to Euro Aussie. It's like, okay, Aussie strong here, got down to here, pulled back here, got down again. It's like, working in some sort of a range that's developing here. Okay, a much longer range, but seems like it's very similar to Aussie USD. Very similar to Aussie USD. Now, in this whole scenario, we come up with a conclusion that, okay, which one looks the absolute best? Which one looks the absolute best? Because that's our main concern, is which one is actually the best one. Because that's how we find out the leader and laggard and everything like that, right? So I personally chose Aussie USD, thinking that, well, he looks the healthiest, but I didn't stop there. Okay, what I'm about to tell you guys now is the toughest part as for a trader to do. Correlation to some people. I got some students who love correlation because they think, you know, it's like detective work. They just want to figure out the story and be like, I know actually what's going on in the market. They love that feeling. It gives them a rush. But then there are other students who are like, just show me support resistance and I'm just going to hit it as a buy or a sell. But don't give me all this extra work to do. And I get that. So what I want you to do, knowing that this information is there, whether it's interesting to you or boring to you, I want you to always remember it in one way. Okay, I say this to all my students. I don't know if I've said to you before in my other courses. I want to ask you guys the same thing. If I was to offer you $500 for a day's work to work for me, how much work would you put in? Okay, you might be saying, okay, well, I'll put in quite a bit of work. Yeah, I like it. You know, why not? What if I say, I bump up the number to saying, if I give you $10,000 in a single day, how much work would you put in? Like, oh yeah, I'd do whatever you want, right? I mean, not whatever you want, but you get the idea. You're like, yeah, why not? Well, what do you got? Let me do it. You know, I'll give it my best. And if I take it up to 100,000, 150,000, 200,000 for a single day's work, now you can see the importance of how much effort you're gonna put into your work. It's like, holy moly, it's a lot of money for just very little work. I'm gonna do this. I want you to treat every trade like that. Because what you do in that trade is going to pay you more than what anything on this planet pays. You need to understand that. So the fact that if you don't enjoy it, put that feeling aside. That's okay. We can enjoy something once we're done. It's okay. If you enjoy it, you're on a good roll, because correlation is extremely powerful. I love it. You put correlation together with money spot, you do some window shopping on top of that, and you got like this edge that the market cannot do, because most people are lazy. Right? Most people are actually lazy. Turn on the TV, any infomercial you see is about, oh, we'll get you abs, just put this machine on your stomach and you'll get 6-pack abs in a matter of 30 minutes. Oh, okay. Let me just take out my wallet, take my money. No, hard work is required. The fact that you guys got this far means you guys are willing to put in the hard work. The fact that you guys wait for these videos to come out each week means you guys are dedicated to put in the work. So let's do it right, and let's do it well. Okay? So I hope that little analogy made sense. Just imagine yourself, if someone was giving you a blank paycheck for the amount of work you do today, then do the work. Do the work. Don't be lazy. Okay. So, now, with all of this said, I personally like to go in a little bit deeper. Okay, so I saw Aussie is strong, and then but there was a situation on pound Aussie, and there was a situation on Aussie New Zealand. Okay, and I like the design of how Aussie USD looks. It's like very uptrendish, right? Which says Aussie strong, because that's the direction I want to go. Now, couple things. Now, if I want to be a buyer with this big boy who's buying Aussies, I need sellers. Okay, I need sellers. And the more aggressive the sellers, the better my chances of buying. So I looked around, I was like, Aussie CAD has some nice aggressive sellers. But this aggressive sellers is almost coming in 100% back. That's a little bit weird. Okay, what else we got? We got aggressive sellers here in Aussie yen. It's like, okay, well, that's pretty good. You know, if there's aggressive sellers there, and we're in a slight incline to the north. But now, do you start to notice there's a difference between the way Aussie USD looks, the way Aussie CAD looks, and the way Aussie yen looks? They're all saying strong, but they're not the same design. One is roller coaster mode, the other one is this little inchworm, and then the other one's in a nice uptrend followed by a range. That means correlation exists in Aussie, but correlation does not exist on the chart pattern. Okay, so we're going deeper into what more correlations can you see visually. So then I took it further. I'm like, okay, tell you what, let me go into the counter pair, the US dollar pair. Let me go into the US dollar pair. Let's tear that apart and let's see what US dollar has to say about all this US dollar in the next video. Okay, so here I am in the US dollar group, and I'm looking at all my daily charts first, right? Just to see what am I gonna do with the US dollar group. So if I look at all the recent markets, if I just ignore the last few candles, because when I was doing all the research at that time, I didn't have the last two candles, right? So I was like, okay, well, this is all recent market says, well, buyer's territory, right? Pound USD, okay, buyer's territory. Whether I look at it that way or whether I look at it that way, still buyer's territory. Okay, Aussie USD, same thing. The last buyer's territory was here. Since then, no higher high, no higher high, no higher high, blah, blah, blah. You get the point. New Zealand USD, buyer's territory. USD CAD, we got seller's territory. Okay, it's like that. Okay, no lower low since, no lower low since. This high was a faker. Okay, if you don't understand that, return to spikes and stuff like that in the MPA course, the Mastering Price Action course. So that's a faker up there, that little spike. And then the US dollar Japanese yen, looking at it for the recent markets, it's like, okay, well, if I look at just the last few candles, I don't see any breaks anywhere. So the closest break I see, or breach I see, is there. So if that's the closest breach, then I'm just going to assume that, well, that's my recent seller's territory. And I'm in a little range there. So I was like, whoa, okay, US dollar across the board is saying weak. Now, this is across the board, not one pair disagrees with it. So there's a bigger boy involved. Okay? Someone is dumping the US dollar like hotcakes. Okay? Maybe they didn't like the election or something, I don't know. But they're dumping the US dollar like hotcakes. Okay. Now, whatever that situation is, that catches my eye like, okay, something didn't make sense in Aussie, but let's see if it makes sense here. Now that we've done all this information, let me clean all this up. Clean. We're gonna go into our 4 hours to do some window shopping, and we're gonna see what's going on. Okay, before I even go into the 4 hours, there's certain things that's catching my eye. Look at this high in December, and look at that high right now. Okay, look at this high in December. Look at this high right now. Look at this high in December. Look at this high right now. Look at this high in December. Look at this high right now. You're starting to notice a pattern? Look at this low in December. Look at this low right now. Okay? December, look at this low or high in December. So this one's all over the place. It's all messed up, right? Because this one's clearly showing an uptrend, but it's temporarily in a downtrend. So it's like, I don't know if I want to touch this one. I don't know if I'm going to go with a sell on this, because it's like, look at that uptrend. You know, it's steeper than a ladder. So we're going to leave this one out, and we're down to 5 pairs that we like. And of course, if you have Swiss franc, you're down to 6 pairs. And I'm sure Swiss franc would probably say the same thing too. Now, nothing so important to it, but it's something just catches my eye. Okay? Let's still go to the 4 hours and do our window shopping there. We're into our 4 hours, and in our 4 hours, if I scroll back to, if I remove the last few days of trading, and I was like, okay, this is the flow I see for Euro USD. Smoothish, working its way up. Okay, nice and smooth. Pound USD, if I remove the last couple of days. Okay, Pound USD, it started from a downtrend, which broke, and then it started going aggressive uptrend. Okay. Aussie USD, if I remove the last couple of days, smooth uptrend as well, but steeper inclines. Okay, not like Euro USD. This looks like a heart rate monitor, right? This one is more like, okay, this guy's going into shock, so it's much more aggressive. New Zealand USD, remove the last couple of days. Look at this one, looks just like Aussie USD, very sharp and aggressive, and an upward flow. USD CAD, remove the last couple of days. It's like, okay, well, downtrend, but what in the world is this? And then downtrend again. It's like, what? What is that? Okay, USD Yen, do the same thing. Aggressive, downward flow. Okay, looks very similar to Euro USD. So what I did was, Euro USD, me no like. He's a runner-up. Okay, he's like my second option, my fallback. It's like that kid that you don't think is gonna make it to university. Okay, fallback option. He might take care of us when we get old. Okay, so that's the fallback option. He's the other fallback option. And then here's the performers. Aussie USD, performer. New Zealand USD, performer. Now, Pound USD, we don't know why it changed direction suddenly, but we see it on the daily. We get some ideas. So we're like, Pound USD, back burner. Don't like it so much. USD CAD, what in the world is that extra spike up? Back burner. Don't like it so much. USD Yen and Euro USD, same thing. They're all runner-ups. Now, our first choices being Aussie USD, nice and aggressive. New Zealand USD, nice and aggressive. Now, why in the world did I choose Aussie USD and not New Zealand USD? Well, what made me pick Aussie USD is because Aussie USD also had Aussie strong in it. Okay, I could have picked New Zealand USD as well, but Aussie USD also had some strength in it. So that made me incline more towards it. Now, the final stage of all this stuff is show me the patterns working together. So when we see the pullbacks happening, okay, here is the pullbacks on from here to here. I'm going to circle it. There's Euro USD. Okay, Pound USD pullbacks. It's there. Aussie USD pullback. There. Okay. New Zealand USD pullback. It's there. Now, notice Pound USD pullback. More, it's dropping further and further, making lower low sequences. Okay, here, low, crossed, low, crossed, low. Euro USD sequence, low, crossed, low, crossed, low. Okay, Aussie USD sequence, low, crossed, low, and then no lower low, and then higher low. Okay, interesting. New Zealand USD, no low, even on the first try, and the second low is already a higher low. It's like, whoa, that looks interesting. So if New Zealand USD looks better than Aussie USD, why did I still pick Aussie USD? Because New Zealand USD didn't have the one factor that makes traders money. It didn't have sellers strong enough to show me the world is thinking it's a sell. At what point are support and resistance damaged? We got a small support resistance breach here, where if the world is, let me clean this up so you guys can see it. See, they've got a small support resistance here when it went higher, right? But then when it breached down to the low, how many people do you think actually look at that like, oh my god, that's gotta be a sell, man. I'm telling you, that's gotta be a sell. But all this is visible as well. Just like, is that really a sell? It's not really changing the flow of people's behavior. Now, Aussie USD on the other hand, if I do the same thing, if I take this flow and then this big red candle starts coming in, boom, support resistance broken. And then it pulls back slowly, and then another one single candle, boom. This creates greed in the market. I need to sell this, otherwise my Ferrari is going to be missing. I have to do this. This is good for business for us. You have to understand this. This is the one thing that makes traders money. You need the opposite party. If you do not have the opposite party, then you're working with a buy that might spike down first before going up, because the buyers don't have enough sellers in there to take their money. Okay? So I hope this logic makes sense on how I ended up picking Aussie USD from this. So finally ended up closing it there earlier today. Just posted it up. So this particular trade gave me $1,000 more or less. I took it in consecutive flows. I added position. I scaled in twice. This is my original entry down here. And then I entered in one more time. I scaled in for another position, and I scaled in one more time right here as well. Take profits just happened on this green bar that flew up. Okay, that was my expectation of the highest point. I drew my purple lines of the range much earlier, but I went out for dinner at this time. And by the time I came back, it smacked right back down. I was like, oh, great. Once it smacks back down, that means this purple line is still holding. So we got a whole new, it's going to take some time. Now, if you understand it's going to take some time, you can sit through it, or you can play a smaller time frame and start scaling in, which I did. You know, I started playing more 4-hour 60s, and I started adding positions because it's going to take its time. So we'll get into all these little details of what more am I thinking about when I'm looking at trades in the upcoming courses. Like even stuff like, how do I scale in? Why do I scale in? And how do I protect myself when I do scale in? So stuff like that. And how do I scale out? There's a scale out process as well. When can I move my stops? All these things. So we're going to end correlation right here. There's going to be, towards the end, when we do putting it all together and everything, the roadmap and all that stuff, we're going to put in some examples where we're going to go through how everything fits into a piece. Then we're going to bring in correlation. We're going to bring in the trade. We're going to bring in everything piece by piece and put it together. And that's when you're going to see how every piece of the puzzle is very important. This, you know, as much as it breaks my heart to release the courses for you slowly, you cannot understand how valuable it is to release it slowly and not all at once and give you an information overload. You have to take one piece at a time and master it. Otherwise, it's like me handing you over the Batman belt and saying, good luck. I can't do that. You won't know which tool to use when. You must learn how to use one tool perfectly. Master the hammer. Once you're done with that, then you master the wrench. Then once you're done with that, you master the screwdriver. Once you're done with that, you master the Allen key, you know, that stuff that comes with IKEA. And then comes the toolbox at the end. And then when you're looking at a trade or a situation, when you open that toolbox, you know which piece to pull out. Because, you know how to use all of them. Okay? So you really need to understand what I'm trying to do here. What I'm trying to do here is walking you through piece by piece by piece. Digest the information, practice it. You have weeks to practice it, and then ask questions if there's any concerns. You're also in the elite community by now. Ask us questions there, so we can help you out over there as well. But going forward, everything that you're doing is going to be stronger and better and more powerful. If you look back, if I tell you to look back right now on where you were before even you started MPA, the Mastering Price Action course, you're going to be looking at the market in a whole different manner. And I'm pretty certain of that. You're not looking at the market like the average retail trader anymore. You're looking at it with a different precision, with one thing running in the back of your mind is like, what is the big boy trying to do? That is the objective, not what does this line represent and how do I use this line for me to make money. The market doesn't know you're even there. You need to understand that. Most people do not grasp that information. We need to step out of that phase that, hey, market, I'm going to trade now and I need you to do what I want you to do. It won't do that. We need to play the game that the market plays. And once we master that game, then things not only get easier, but they become fun. Because once you start making money during these trades and stuff like that, it's actually fun. Just imagine yourself finally doing the job that not only gives you the freedom, but it's actually fun. You enjoy doing it. Not every day is the same day. So there's always a uniqueness to it. And every time you're solving a puzzle, which is like, cool. Like, I didn't know something like that extra spike that kicked in. Like, oh, interesting. All these things make you a smarter and better trader also in due time. And then you write your own paycheck. It's a beautiful thing. It's a beautiful thing. So hang in there. I'm seeing a lot of progress from a lot of you guys already. So good work on that. I'm seeing a lot of progress in the elite community as well from all of you guys who have joined. So excellent work there as well. So I'm going to cut it short right here for the correlation, and next week we're going to come in, we're going to dive straight into the other pieces. Okay? Thanks a lot. See you guys soon.